Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Wednesday, April 8th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. We were up 3.41% today on the S&P 500, and we closed at 2749.98. What we're looking at here is a 3-day chart where each candlestick represents 5 minutes of trading on the S&P 500. The reason I wanted to start off with this chart is to show you here this 2750 line and this blue line that I put in there at the 2750 level. And you can see there that yesterday on the 7th, we rallied right up to this level and tried to get above it. We got rejected. And of course, we know that we closed at the lows of the session yesterday and slightly negative for the day. So today we had a much better technical looking day, and we punched through on a 5-minute candle, right, just right before the close of the market. The last 10 minutes, we punched through that 2750 level and then got rejected and closed just below the 2750 level, again closing at 2749.98. So the question for tomorrow becomes, is this the beginning of a reversal after a pretty monstrous 3-day rally that we've had? So I think we just need to be careful here going forward because nothing really has changed fundamentally. And, the markets have moved a lot in a very short period of time on the back of hope and news headlines. Now let's take a look at a longer-term chart. What we're looking at here is a 3.5-year chart of the S&P 500 where each candlestick represents 1 week of trading. And what we can see here is that this 2750 area, this blue line that I have annotated here, is a very important support and resistance level and has been with us really since the end of 2017, beginning of 2018. So where we're trading at right now, it brings us back to about where we were at the beginning of 2018. So we still lost all of 2018, 2019, and the first quarter of 2020 at this point, but it's nice to be back to this level, no doubt about it, all right? But you can see here that this 2750 level, we're starting to get into a lot of support and resistance going clear back for several years, so it will more than likely be harder for the markets to continue to advance here than it was even at the 2600 level, which, as we can see, took us several weeks to punch through that. You can see the wicks on these candles. We tried to get through the 2600 level, but we couldn't close above it on a weekly basis up until this week. Now, look, this week's not over. We still have a couple more days, but definitely this week is looking like it wants to close above this 2600. Of course, the next couple of days will be key in that. But guys, I want you to understand this is still a very, very high risk environment. So just because we've moved up above this level, don't take that to be that risk is off and that all is good, okay? So please understand that this is still a very high risk environment. Now what we're looking at is the ETF for the S&P 500, where the previous charts and most of the work I do is actually on the index itself, but as you guys know, you cannot invest directly in the index. So I've switched over to SPY. The SPY is the largest and oldest ETF that gives you access to the S&P 500. The reason I wanted you guys to see this chart on the ETF SPY versus using the index is I wanted you to see the volume today, okay? And on today's volume, we can see that it was down substantially over the last couple of days. So volume does matter, all right? And so we've got the largest ETF in the space, right? The largest ETF where you can get access to the S&P 500 because the index itself is uninvestable, and we're seeing falling volume as the market goes up. That is not necessarily a positive thing. Now, I want to be fair about this. Definitely the volume here is higher than it was over here, but when we're starting to see the market go up on falling volume, that is not necessarily positive, okay? That can set up a negative divergence. So we'll definitely need to keep an eye on this, because if today was such a great day in the markets, and we definitely moved up a lot, no doubt about it. But why wasn't the volume higher, right? Why weren't the institutional investors piling in on increasing or at least stable volume on today's move. So definitely something to keep your eye on. The other reason I wanted to use this, and we kind of looked at this yesterday, but I wanted to revisit this, is the blue lines here. This is the Fibonacci retracements on this move that we've had from February 19th, where we peaked in the markets, to March 23rd, where so far in this downturn, that's been our bottom. And again, all we've done, guys, is we've come up and retraced a portion, right? We've retraced a portion of this downturn, and we haven't been able to get back to this 50% retracement level yet. We're definitely above this 38.2% traditional Fibonacci retracement, but we're having a hard time getting closer to this 50%. So we'll definitely want to keep an eye on that. And lastly, let's take another look at this 3.5-year S&P 500 weekly chart. So that's, again, this chart here, but I've overlaid another chart on top of it in a line chart, and that is the EEM. Now, the EEM is an ETF that tracks investments of large and mid-cap companies in the emerging markets. There's over 1,200 holdings in this ETF. Again, that's EEM is the ticker symbol on this. You can see it right over here. That's the black line chart that's overlaying the S&P 500. And again, we're looking at the last 3.5 years. All right. And so your largest holdings in this are Alibaba, Tencent, Taiwan Semiconductor, Samsung, and the China Construction Bank Corp. All right. That's the top 5 holdings. And the top 5 countries represented in this ETF are China, South Korea, Taiwan, India, and Brazil. Okay, and again, that's the EEM. The reason I wanted you guys to see this is that coming into our peak, we had already for several years been seeing weakness in the global markets. And this is the EEM. So, again, that thing peaked back in January of 2018, and you can see that it's been on a steady downtrend since. It tried to rally a little bit at the beginning of 2020 here, but you can see that it rolled over even before our markets peaked. So we've had global weakness for several years coming into our peak in the markets on February 19th. Now, before we wrap this up, let me ask you a question. Are you a calculated individual? Do you consider yourself a calculated risk taker? Would you like to know what type of risk you are subjecting yourself and your money to? If so, I would encourage you to take a serious look at Simple Market Signals, because Simple Market Signals is like risk radar for the U.S. stock market. And with that said, I'm going to tee up some information for you on Simple Market Signals. Please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. The Simple Market Signals product is a weekly newsletter that contains our proprietary market signals. The newsletter is emailed to our subscribers each weekend. Our goal is to have the newsletter to our subscribers by no later than 2 p.m. Eastern Standard Time each Saturday. You will also, as a subscriber, receive special midweek updates when warranted. So that is whenever there's a major signal or direction change, and that will make more sense after you go through at least 1 or 2 of the videos that we're going to introduce here in just a second. And guys, keep in mind that Simple Market Signals, this is not for day traders. So if somebody has a really short-term time horizon, Simple Market Signals probably is not going to be for you. Simple Market Signals is for investors and traders with at least a 6 to 8 week plus focus. So as long as an investor or trader has a time horizon of at least 6 to 8 plus weeks that they're focusing on, then Simple Market Signals is going to work extremely well for them. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. So we give you the first 2 weeks so you can take a look at the newsletter, see what we do. If you don't like it, you have plenty of time to cancel without being assessed any fees at all. So we have made this as risk-free for you as possible. If you would like to learn more about Simple Market Signals, I have the following videos on my YouTube channel. I will also leave a link to these videos in the description box below this video. First off is the longest video. It's about an hour long, and it's the Successful Investor webinar. It's the entire story of Simple Market Signals, including my background and why I feel that most people are going to need Simple Market Signals going forward. there's a tremendous amount of market education in this webinar. So I would encourage all of you to go out and watch this because it is extremely educational, and if nothing else, it'll be very thought-provoking when you watch this webinar. So I would encourage you to do that. Again, that video is out on my YouTube channel. I will also leave a link to this video and all of the videos I'm going to introduce here over the next couple of minutes in the description box below this video. Now, if you want something a little shorter, about half an hour long, introducing simple market signals, it has a lot of the same information as the webinar, if you will, but I cut it down to make it fit into a smaller time frame. So it still gives you a ton of information. It's just not as inclusive. So if you're not interested in investing the whole hour, which I would encourage you to do so, but if you want something a little shorter but still very informative, introducing simple market signals would be the video you would want to watch there. And if you want the cliff notes, right, you want something that's less than 10 minutes long and gives you more information about the signals and the newsletter, which of course is how I deliver the signals. My proprietary signals within the Simple Market Signals model are delivered in the weekly newsletter. The newsletter has a ton of really valuable information in it every weekend over and above the proprietary market signals. But if you just want to kind of focus on the signals and the newsletter and what's in the newsletter, you'll want to watch the Signals and Newsletter Quick View, as I call it. And then if you want more information about the process, about what it looks like, when you subscribe, when you go out to the Simple Market Signals website, what does that look like? And it walks you through the subscription process and then what you can expect from there. This video will help you with that. And if you want some testing and you want to see some charts, right, in a video format of how simple market signals would have worked in the 2000 through 03 bear market, keep in mind I worked on the model for over 20 years and it finally came together for me in 2017. So this is back testing, but it's very accurate because I was able to just go back, look at the charts, and figure out with the model where the signals would have kicked in and where the signals would have changed. So if you want to see the back testing I did on the bear market from 2000 through 03 and how simple market signals would have helped you, the video here, S&P 500 2000 through 03 using simple market signals, is the video you will want to watch. And then I did the same thing for the 2007 through 09 bear market. So again, there's a video on that. I started using the model in 2017, and of course 2018 was a pretty tough year in the markets. The markets were negative that year, and if you'd like to see how simple market signals could have helped you in 2018, I've made a video on that as well. Again, all of these videos are out on my YouTube channel as well as linked in the description box below this video. And if you'd like to know more about my background, I have a video titled My Financial Services Background. It's about 3 minutes long, so pretty quick video, but it will give you my backstory. And I would encourage all of you to watch that video as well. And of course, if you'd like to go out to the website can be found at https://simplemarketsignals.com. And that is the website you will need to go out and subscribe to Simple Market Signals and receive our weekly newsletter, which will include, of course, our proprietary market signals.